This video is for entertainment purposes. This is not investment advice. This past week these 15 commercial stage non-oncology focused biopharma companies of the 72 we track reported Q2 2024 revenues, as did 2 of the 27 oncology focused commercial stage biopharmas. Recall we track those with market caps of less than 10 billion at the time of approval going back to January 1, 2016. The headings should be self-explanatory. To the right of the respective FDA approval date you'll see the reported actual revenues for the second quarter 2024 in column B, consensus revenue estimates in column C, and in column D the number of analysts in the consensus. To the right, in column E, we note the beat or miss in dollars. All amounts are in millions. A negative dollar amount means a miss, and last in column F the beat or miss is a percent of the estimate. Let's look at the trading activity for the 5 that beat or missed by more than 10%. Before we start, we did not consult with any company in the preparation of this video. First up is Ultragenyx that reported a beat of 24 million or 19% for the second quarter on Thursday after the close. This is a graph of their share price year to date per Yahoo Finance through Thursday, August 1st, before Friday. Our Yahoo Finance graphs show the share price on the right side and are not to scale, so changes appear more dramatic than they actually are. You'll see Ultragenyx more or less traded sideways for the year before and after April 15 when they reported a serious side effect in their GDX-102 candidate for Angelman syndrome. Though the drop looks dramatic on our graph, again it is not to scale. Shares fell about $5. Let's look at Ultragenyx trading yesterday, August 2nd, the day after Ultragenyx reported. Incidentally, while the XBI opened down 2.6%, we see Ultragenyx opened up $3 or 7%, then traded right back down consistent with the XBI to where it closed within the first hour, but clearly from there rallied more or less for the rest of the day, albeit with a peak to close up 14% at just over $50. Back to a graph of Ultragenyx for the year that includes yesterday, we see Ultragenyx closed very near its year-to-date highs. We'll follow up on Ultragenyx and all of the stocks we review today at the end of August to see what happens from here. Before we move on, would you please take a minute and follow us on YouTube, StockTwits, and Twitter or X if you prefer. Thank you. Also, please allow us to apologize in advance as this computer-generated voiceover will mispronounce names and words, especially complex names for drugs. We mean no disrespect to any biopharma or patient. Next up is Ardelyx that reported an 18 million Q2 beat, which was 33% ahead of consensus. Let's start with a graph of Ardelyx year to date. Again, the share price on the x-axis is on the right side. Recall on January 8 Ardelyx first said they expect Ibsrela sales could eventually pass 1 billion before patent expiration in August 2033. They also provided a snapshot of Sfiza's launch from its approval the prior quarter. The stock jumped 50% over the next 2 days. Now look folks, we are not experts on any of these companies. It appears Ardelyx then started to trade lower as challenges appear to lie ahead getting its Sfiza reimbursed. Ardelyx's reimbursement challenges are way beyond the scope of this video. Nonetheless, Ardelyx jumped right back up in early May when they reported a 10 million Q1 beat, which was roughly 28%. Ardelyx's share price again traded lower. We'll ignore this brief spike as again we are not experts on any of these companies. However, we do know on Thursday, August 1st after the close, Ardelyx reported another beat, this time exceeding Q2 estimates by 18 million, which was 33% ahead. Ardelyx reported 37.1 million in Q2's Sfiza sales, coupled with 35.4 million in Ibsrela sales. Ardelyx handily beat estimates. Both products use the same API called tenapanor. Unfortunately, we do not have consensus by product. Here is a graph of Ardelyx's stock on Friday, August 2nd. Again, the XBI opened down 2.6%. Ardelyx opened slightly higher at $5.64 a share, then rose to just under $6 after, much like Ultragenyx, traded down lower until about 11 a.m. when it started moving and staying higher to close up 10% for the day. Now folks, Innoviva is technically on our list because their Soldier therapy, and we're certain this automated voice creator is mispronouncing the name, was acquired when Innoviva bought the rest of Intasys shares they did not already own in June of 2022. Soldier was then approved at the end of May 2023. You are looking at the year-to-date graph of Innoviva's share price. Again, the graph is not to scale, so changes appear more dramatic than they are. Still, it appears Innoviva's stock has done well the last few months. Innoviva generates most of their revenues from royalties and licenses. Most important for this Ardelyx, as best we can tell, only one analyst had covered Innoviva at least for this quarter. We read Cantor started coverage 2 months ago with a buy rating due to the diversity of their portfolio. Hence, a beat from AN of 1 is not as meaningful. In any event, Innoviva reported 100 million in Q2 revenues that beat the one estimate of 75 million by 35%. They reported Q2 last Wednesday, July 31st after the close. Here is a graph of Innoviva trading for the week. You see Innoviva at first traded lower before recovering. By lower, we mean lower by less than $1, and by recover we mean trade higher by $1. Again, we do not track Innoviva in any other great detail. Last up in the non-oncology group is Lexicon Pharmaceuticals. This is a graph of Lexicon for the week. Investors will remember Lexicon first became a commercial stage biopharma back in February 2017 when its teletristat etiprate therapy was approved for carcinoid syndrome. Lexicon got sales to something like 32 million in 2019 and then sold it in 2020 to TerraSAR for $155 million plus $4 million for inventory. Then after an initial complete response letter to their sotagliflozin NDA for type 1 diabetes in March 2019, sotagliflozin was approved in May 2023 for heart failure branded as Innoviva. Incidentally, Lexicon said they resubmitted their NDA for type 1 diabetes last quarter. We'll ignore Lexicon year to date because the ultimate purpose of this exercise is to catalog trading in the days before and after big beats and misses. On Thursday, August 1st after the close, Lexicon reported 1.6 million in Q2 in PFA sales, which was a 52% miss from estimates of 6 analysts of 3.4 million. Now of course in total dollars such a miss does not appear enormous. For all we know, Lexicon provided a pipeline update that disappointed, resulting in the share price drop. Still, Lexicon hit $2.39 a share at its peak on Wednesday, which Yahoo Finance reported as a market cap of 860 million. Lexicon was down Thursday 10%, which was somewhat consistent with the market. Lexicon then closed Friday after reporting the miss at $1.70 a share, which Yahoo Finance reports as a market cap of 612 million. Put simply, it appears Lexicon lost just under $250 million in value over 2 days while reporting a miss of less than 2 million. Hey folks, again, for all we know, Lexicon stock reacted to something else in the Lexicon conference call. For anyone familiar with Lexicon, please leave a comment on why you believe the stock is down. Last up is Blueprint Medicines, the one oncology-focused commercial stage biopharma we will review that had an enormous beat this week. Here is a graph of Blueprint's share price year to date. Again and for the 6th time, these graphs are not to scale. You'll recall on February 15 Blueprint raised its peak sales potential to $2 billion. Blueprint stock then jumped $15 or 20% over the next 2 days and more or less stayed between $90 and $95 until May 2 when Blueprint reported Q1 revenues of $96 million that beat estimates by almost $15 million or 18%. Blueprint then jumped again and stayed between 105 and 110 a share through the end of June. Blueprint jumped again at the beginning of July to hit 120 a share on July 15. We are unaware of any catalysts that drove Blueprint higher in the first half of July, except Blueprint's gains were more or less consistent with gains in the XBI during the same time. Incidentally, Blueprint is almost always identified as a likely buyout candidate and makes up about 1.2% of the XBI. In any case, on August 1 before the open, Blueprint reported Q2 revenues of $138 million that handily beat consensus by 34 million or 33%. This is a graph of Blueprint trading for the 5-day week just ending August 2, 2024. Blueprint opened the week at $112.44 a share and, as we will share shortly, more or less traded consistent with the XBI through Wednesday before the Q2 release. In spite of a 33% beat, Blueprint opened down $1.79 a share, while you may recall the XBI initially opened higher on Thursday morning. Now $1.79 is less than 2%, so, again, these graphs are not to scale, so the drop looks more dramatic than it really was. Blueprint then falls another $7 to $99.40 by 10 a.m. before recovering the $7 and then some by 11:10 a.m. Blueprint then more or less traded consistently lower over the remainder of the next 2 days to close Friday at $96.42 a share. From its Wednesday close of $108.30 a share, Blueprint was down 11% over the following 2 days after announcing a 33% beat. Again folks, for all we know, investors may have been spooked by a pipeline update. For entertainment only, let's overlay the XBI over Blueprint. We're sorry folks, Blueprint is the darker blue. We'll make the graphs easier to read on our next video. Though the graphs shows the changes in percentages, Blueprint traded lower as a percent than the XBI as a whole. Again, and only to be crystal clear, there may well have been other news included in the Q2 release unrelated to revenues that caused the drop. Before we wrap up, 3 weeks ago we posted a video on Jazz Pharmaceuticals outlining Jazz's hypothetical M&A valuation if Jazz's analyst consensus revenue estimates were close to Jazz's internal forecasts and if Jazz was acquired at revenue multiples consistent when BioPharmas was acquired by Sanofi back in 2018. Yes, these were and are too big, and we mean huge ifs. It was definitely not investment advice because we have no idea how any stock will trade in the future, but our analysis concluded Jazz's enterprise value at the time was markedly below such a hypothetical M&A value. Going back to our list, it is interesting to note that Jazz reported Q2 2024 revenues last Wednesday after the close that were in line with estimates, yet Jazz's share price was up the next 2 days while the XBI traded much lower. Here is a graph of Jazz versus the XBI for the week just ending August 2, 2024. Jazz is in blue and the SPY is in a light purple. Isn't that interesting? Again, and only to be clear, our Jazz video was not investment advice. Okay folks, to wrap up, we have no stunning insight or ahas to share. We do not offer investment advice. Our simple objective is to begin cataloging trading activity of those commercial stage biopharmas with big revenue beats and big revenue misses in the days and weeks after reporting. For those interested in other commercial stage biopharmas that are expected to report Q2 2024 revenues over the next 2 weeks, here is a list of such biopharmas' expected release dates. These are first sorted by earnings release date and then by market cap. You'll have to pause the video as we're showing the remaining 57 commercial stage non-oncology focused release dates and the remaining 25 oncology focused biopharmas with FDA approved therapies. Some have issued press releases announcing when they will report earnings and some we guesstimate by extrapolating when they reported Q1 results. For example, last quarter PTC Therapeutics reported Q1 sales on April 25, so we assumed they'd report Q2 revenues on or around July 25. Our simple point is these dates could be wrong. We'll report on big beats and misses in the following weeks. Again, please take a minute to like this video and follow us on social media including YouTube, StockTwits, and Twitter or X. Thank you very much for watching.